Hey, a toasty bagel. That sounds good right about now. What kind of bagel, though? Everything? I'm going to wait for a couple more people to join, and then we will get started with the most musty live on all of finance TikTok. I'm going to go over some earnings, of which we've got some big ones this week. We've got some big earnings this week. Again, good morning from Georgia. Hey, I'm in Georgia. But only for a little bit. We're house sitting and dog sitting, really. We're really dog sitting. And Robin is downstairs today, so she won't be bugging us. Although maybe she'll come up at the end to say hello. We made bacon and left it on the counter, and she was just like drooling and whining. Ay, ay, ay. Hey, winemaker is here. I'm going to wait for a couple more people to join, but so far everyone's doing the right thing. Whoever is joining is smashing that like a whole bunch. The more you hit the screen, the more people it brings in. It doesn't really benefit me in any other way other than, bacon. This is now a bacon live. It's about bacon. We're going to be talking about bacon, not stocks, only bacon. I'm going to wait for a couple more people to join, and then we'll get started. Feel free to start asking your finance questions. And by the way, I have to say this down here. If you ask a question, don't leave. It's not a filmed live. This isn't a pre-recorded or an old live that I'm restreaming. Delightful. Thank you so much. It means a lot. Bacon has jumped the shark. Is that possible? Speaking of bacon, Beyond Meat, their earnings are out on Tuesday. Bonjour. How about GPCR? Let's take a look. I'm going to wait for a couple more people to start asking some questions, and then we'll really get started. GPCR. Never heard of this one. Structure Therapeutics. Is it a penny stock? It is not. It's $40 a share. Last year it went up 66%. This year it's down 0.61%. They don't offer a dividend. Their grades are kind of a mixed bag. Let's scroll down a little bit and look at their earnings. It says no earnings. Are they recently public? Yeah, well, about a year ago. They went public last year. Since their IPO, they're up 76%. This is not a company I've heard of. GPCR, Structure Therapeutics. Let's take a look here. The 1-year price target for it is $80. TipRanks is now charging, which is kind of a dick move, I think. I don't know if I can say that, but I just did. And I don't pay for it. How do you feel about mRNA? Moderna? I like Moderna. Let's see here. Moderna is down 34% in the last year. Year to date, it is down 3%. They also don't offer a dividend. They are a biotech company with a mixed grade on bags. Their growth is rated at an F. Their profitability is B-. Their momentum is C+. Revisions is D. Valuation is C. Growth, like I said, is F. I feel like there are probably better stocks in the biotech sector. Carvana, I don't know if I would touch Carvana. Let's see what it is now. I remember it got like really carried away for a while. Did they do a split or something? I thought Carvana went like into the hundreds per share, like, or maybe even the thousands. That's why I feel like they must have done a split, because now it says that it's $60. Let me just take a look here. I know Carvana has kind of an iffy history of buying like really junk cars and then just reselling them, so people are getting screwed. It doesn't look like they've had a split, so I must be looking at something else. Yeah, it's like a meme stock. I think it's just one of those stocks that got really carried away. A lot of people really rushed into it because they thought they were going to get rich, and maybe some people did. It went up 586%. So imagine you bought it last year at $6 and you sold it at in the 40s or 50s. You'd be pretty happy. I think I might stay away from it. But that's just my personal opinion. I just don't know how profitable it can be. Celsius, I actually made a video a few weeks ago. It's in my stock fight playlist, so go check it out. It's Celsius versus Monster, and it compares both of the stocks. How do dividends work? Do they grow in the account, go into your bank account? It depends on how you set up your account. So if you have an individual brokerage account and you get a dividend from a company and you haven't enrolled in something called DRIP, which is Dividend Reinvestment Plan, the dividend will just come into your account as cash. I prefer to reinvest the dividends. That's what we always talk about when we talk about compounding. So you reinvest the dividend, so the dividend hits your account. In an individual account, whether you reinvest it or not, you will be taxed. That's the downside. In an IRA, you're not taxed on the dividends. But so that's why I say it depends on the kind of account you have. You enroll in DRIP, dividend hits your account. The next day or that same day, it'll say like you got $50 in dividends. You bought 2 shares of your company or 1 share or a quarter of a share, whatever the price of the stock is. And this allows you to compound over time. So 1 share this quarter can become 1.2 shares and then 1.4, and maybe you have hundreds of shares. So you're getting like 20 or 30 shares every quarter. You can see how that number can really tick up higher and higher and higher. Before you know it, you're earning 60 more shares and 100 more shares, and 40 years from now or 20 years from now, whatever time frame, you're living off those dividends. So at a certain point for me, when I get to a certain age and I say, hey, I want to retire, and I've built this portfolio over the last 30, 40 years, I will go in and I will say, remove it from DRIP. I want the cash coming into my account now so I can use that to pay my bills and live my life. Another thing I do when it comes to dividends is if it's a really high risk dividend or really speculative, the one that I'm talking about off the top of my head is Zim, the Israeli shipping container company, was offering this massive dividend a few years ago. They've since cut their dividend. Gone. It's gone. They didn't reduce it a little bit. They didn't cut it from this to that. They eliminated it. And the stock tanked. And I had a feeling it would because the dividend was just so high. So when I was getting the Zim dividend, I said, don't enroll that one in DRIP. I don't want more shares in a stock that's losing value. And when they announced the dividend cut, which I kind of predicted they would do, the stock will tank even further. So I said, just give me the cash for that one. Is it good to average up with dividends or buy into the S&P? I mean, you're going to be averaging in at all different prices in the S&P 500. So some months, like let's say you start in an S&P 500 index fund when it's $50 per share. And it's a really strong year, and now it's $63 per share for that index fund. And you're reinvesting every month. You're going to be averaging up on those months. Now let's say there's a massive recession and it goes to 43. You'll be averaging down. And the idea is that over time, you'll just get an average price. Some you're going to be buying at a much lower price. Some you're going to be buying at a much higher price. Doesn't really matter because the idea behind an S&P is that it's long-term always going to go up. Maybe short-term there will be issues. Maybe there will be a recession. Maybe it'll be sideways for a couple of years, a decade. But it doesn't matter if you're 20 or 30 or 40. It only matters when you're starting to invest at 50. If you look back at 2008 to 2000 and I don't know, the last that around that 10-year period, I guess we can look it up here. If you look back at that period in time, it was kind of sideways. The S&P 500 really didn't do a whole lot from like 2002 to like 2013. It really kind of stayed in the like 1500 range. And then there was the housing crisis in 2008 where it went from 1,500 to I think like 700 or something, 770. So as you're getting older, if you're 50 and you're just starting to invest and you pick it and you let's say there's a recession in 2 years and it takes 4 years to recover or something like that, it impacts you. So that's why investing early is the best. When does the bubble pop? I wish I knew. Carvana is a meme stock. They tank. Oh, they did tank. Okay. Cisco. Let's take a look at Cisco. This would be the food one, right? Food distributor. I was going to say food distribution. So it's not Cisco, the tech company. It's Cisco, the food company. If you ever, I used to work in a restaurant and we used Cisco for all of our stuff. And it was pretty low quality. I mean, maybe they have higher quality options, but when I drive around and I see trucks pulling up to restaurants and they have Cisco delivering their food, I'm like, oh, this is less than ideal quality food. But it could just be that, they're distributing higher quality to certain places. I don't know. Cisco over the last 5 years is only up 20%, so it's not very much growth. Over the last decade, it's up 124%, which is okay for a food distribution company to be up 124% in a 10-year period is fine as a part of a diversified portfolio. But you look at an S&P 500 index fund, and over that same period, it's up 170% or thereabouts. So I wouldn't pick Cisco as my standalone investment, which I'm sure you're not, but just for people who are watching, as a part of a diversified portfolio to give you some I guess retail, restaurant, fast casual dining in your portfolio that is just food delivery It's okay. They pay a dividend. They have a dividend safety grade of A minus or 6.24% dividend growth over the last 5 years. Their dividend is 2.47% though, so it's on the smaller side for a stock that's $80. All right, I'm going to jump down to the bottom. I'm going to work my way back up. QYLD, I like QYLD, but it is not a standalone investment. It is not meant to track an index. They are strictly selling covered calls against the NASDAQ 100. So if the NASDAQ 100 goes up like crazy, QYLD will not also go up like crazy. In fact, it might even go down. It might go up a little bit or it might go down. It's really dependent on when they're purchasing their shares because they own the shares. They're writing the covered calls. The shares are getting called away, so they're losing the shares. Then they're repurchasing the shares and doing the whole process again. So maybe they've repurchased the shares at a higher price that month, and then the markets go down that month. The premiums might be a little bit less, and the stock will lose value as well, or the ETF will lose value. So I still like it. Rivian, can it still stay viable? I don't know, man. After that last earnings report, it was pretty bleak. The stock went down 12% in one day. It's down 37% in the last 5 days alone. That's brutal. For a speculative company to be down 37% in 5 days is rough. In the last 6 months, it's down 50%. In the last year to date, so since January, it is down 57%. In the last 1 year, it is down 44%. And since going public, Rivian is down 92%. They have a very rough road ahead of them. I have always said this in any video you ask about Rivian, or anytime I go live and someone asks about Rivian, I say I own it, but it is hugely speculative, and it is a very small part of my portfolio. In the event that something like this happens, I just shrug it off and I go, no big deal, because the majority of my money is in boring stuff. Cisco is known for low quality, low food prices. Okay, that's what I figured. I wasn't sure if they were a food distributor, so you could pick higher quality ingredients. But in my experience in the restaurants I've worked in, when a Cisco truck pulls up, it's usually a bad sign that they're not getting good quality stuff. I am one of your followers. What are your thoughts on KRTL Holdings? KRTL. I've never heard of this one. No. It's a penny. It's a penny. I wouldn't put in more than I was willing to lose. In your opinion, is SoFi good long term? Yes, I own it, so I sure hope so. If you haven't seen my video, go on my page here on TikTok. It's a couple videos old. It's SoFi versus Nu, the Brazilian SoFi. It's the Brazilian online bank that Warren Buffett is heavily invested in. And it was pretty interesting when we broke it down. There was a lot that I didn't know about Nu. And I like SoFi. I continue to hold it. I think it'll do fine long term. Would you keep investing in stocks in retirement? Yes, but it'll be a much smaller amount. See, my goal, at least my personal goal for retirement, is that I want to grow my wealth now while I'm young. I want to grow my wealth now while I'm young. Take more chances. Put my money in more high risk growth stocks, not high risk penny, but high risk growth. Stuff like Nvidia, Apple, Netflix, AMD, stuff like that that's meant to grow. I don't own AMD, but just as an example. And as I get older, ideally, here's a little list. So I bought WWE in 1999. I still have it. I bought Apple in 2003 and 2009. I still have it. I bought Meta on IPO day in 2012. I still have it. I bought Tesla in 2015 or 2016. I can't remember. And I still have it. I've sold portions of these shares when I had to buy my home. But I still own a lot of shares in these companies, and I'm going to continue to be buying in these investments. I didn't just buy once. I bought, I do like a lump sum kind of thing, but I do like lump sum and then dollar cost averaging when I feel like it. So a long time ago, I picked up a couple hundred shares of all these different stocks. And then when there's a big down day in the market and I go, wow, this stock is down 8% today. That's weird. Great opportunity to get some at a discount. I'll buy a couple more shares, whatever. When I get old, I'll have made my money. I will start rebalancing my portfolio. So I'll look at everything and we'll look at everything and go, wow, I have thousands of shares in this one and thousands in that one. And humongous profits in all these companies. I'm going to sell a little of this and a little of that. And I think this company maybe has peaked in terms of growth. 20 years from now or whatever, I'm going to sell majority of those shares, but keep a little, and I'm going to live off that money. And I'm going to put some of it into bonds, some of it into CDs, if CDs are paying well. CDs didn't always used to be paying well, by the way. People look at CDs and they go, wow, CDs, look at these rates, look at these rates. It's not always. It hasn't always been. I mean, for anyone who's been investing for the last 20 or 30 years, you know CDs used to be 1 or 2%. They didn't used to be 5%. Going into BA at 125, feelings. I like Boeing. They've had some rough times recently because of their flights. I think anytime this happens with Boeing or an airline company, anytime anything happens with an airline company, sorry about my nose, we're dog sitting and I'm allergic to dogs, for those who are new and have never seen me constantly itching my nose on a live. It's down 23% year to date. That's not great. They don't pay a dividend. That's another ding against them. Their grades are kind of whatever. They have a valuation grade of F, which means that they're very overvalued. Their momentum is rated at a D. Their revisions is rated at a D. Their profitability is A+, and their growth is B-. So I like Boeing. I don't invest in it. I probably won't, because I don't want to invest in companies that are profiting off of war, and that's part of what they do. They make planes and stuff like that for wartime, which seems like all the time is wartime now. And they don't pay a dividend, so there's a couple of dings against Boeing. I use a website called TipRanks, and it used to be that you could look up stocks as many as you wanted. Now they're putting a cap on it. They're saying you can only look at like 10, and then you're blocked for the rest of the day, which I think is a really cheap move on their half, and they try to charge you. It's like $15 a month, and I'm not going to pay that. But in the meantime, I did look up Boeing. It's 200 right now. It has a 1-year price target of 262. Vici or O for dividends, I can't make that decision for you, but they're both good. I'm 56. What's a good investment? I would focus more at 56. I would focus more on passive income. So real estate investment trust, like the comment below just asked, Realty Income, the symbol is O, or Vici Properties, the symbol is VICI. If you're already heavily invested and you don't mind taking on a little bit of risk to make some passive income, covered call ETFs like JEPQ or QILD are okay options to consider. With JEPQ and JEPI, JEPI, you'll also get gains from the markets going up because they do a hybrid approach. So they invest in a portion for long-term growth, and they sell covered calls for long-term gains. If you already have an S&P 500 index fund, then you probably don't care so much about that. Then you could go into something like QILD, which pays a significantly higher dividend but has no exposure to the markets. It's just covered calls that don't do that hybrid approach. But their dividend is a lot higher. So for added income, it's great. Is it best to reinvest dividends from SCHD? It is probably the smartest thing you can do, to be honest. I mean, that's how you get the benefit of compounding. It's not a high-risk investment, so I wouldn't be worried about reinvesting into it. It's very high quality. It's often regarded as like the best dividend ETF on the market for a variety of reasons. Yes, I would reinvest my dividends personally. What are your thoughts on KRTL? You already asked. I already answered. It's a penny. KRTL. Is that the one that was a penny stock? KRTL. Yes, it's 1 penny. I'm not answering that one. It's garbage. Melly thoughts. Mercado Libre is currently $1,600 a share. It dropped 10% on Friday, which is not good. However, in the last 12 months, it is up 43%. They don't offer a dividend, but when they have big growth, like up 43%, a 2 to 3% dividend doesn't really mean a whole lot. In the last 5 years, it's up 334%, which is massive. In the last decade, it's up 1,400%, which is huge. Their growth is rated at an A. Their profitability is rated at A+. Their momentum is an A, and their revisions is an A-. The only bad grade they have is an F for valuation, which means that it's very overvalued compared to the overall sector, which it says is broadline retail. Automated online commerce platform that enables businesses, merchants, and individuals to list merchandise and conduct sales and purchases digitally. So that's what they do. They're based out of Uruguay, which is wild. I didn't know that. Their revenues are through the roof. In 2019, they did $2.3 billion. In 2020, they did 3.9 billion. In 2021, they went from 3.9 to 7 billion in revenue. In 2022, they went from 7 billion to 10.5 billion. In 2023, they went from 10.5 billion to 14.5 billion. That's crazy growth. They're expected in 2024 to do 17.7 billion, and in 2025, 21 billion. The growth on this thing alone is massive. Very interesting here. I would like to see what their 1 year price target is according to the analysts. So I'm going to use one of mine to look. It's 20%. And 20% to the upside. So it's currently 1,600. The analysts think it could be 1,900. Very good one. Are you taxed on money you take out or just dividends? You are taxed whether you take it out or not in an individual brokerage account. So not a Roth IRA, not a traditional IRA. If you just have a regular brokerage account like what I have, I also have a Roth IRA. But if you also have an individual brokerage account and you get taxed on a dividend and you get a dividend, you're taxed. If you reinvest it into more shares, you're still taxed. I think it's bullshit, but that's how it is. Thoughts on the Reddit IPO? I'm not touching it. Hey, ambitious, thank you for the heart. I'm actually, I have a video in the works on Reddit that I haven't yet filmed. I was just doing some research here. Their active monthly users is 850 million in 2023. TikTok, Instagram has 500 million active users. TikTok has 50 million. Wait, is that TikTok or? Yeah, TikTok. TikTok says that it has 1.5 billion daily active users, and Reddit has 850 million. They're making money, but they're still losing, which is unbelievable to me. Their revenue, I had a chart up here earlier. Let me see if I can find it. It might be on their statement here that they released. Now I don't think I have it. Nuts. I had it earlier. Well, their net income is at a loss. So even though they're making lots of money, they're still losing lots of money. So I'm staying away for now, but it's a social media site. It's incredibly popular. I'll be keeping an eye on the IPO. I just won't buy on IPO day. Rivian is tanking. It looks like all electric vehicles are tanking. Yes. Do I like Rivian after earnings? No. I own some Rivian. I don't know if I'm going to bother buying any more at this level, even though it's down quite a lot. At this point for me, it seems like throwing good money into a bad investment, even though it sounds contradictory to what we're always taught about buy low, sell high. With this one, I'm gonna wait for a turnaround. So yes, it's $10 right now. It would be a guess as to when they recover or if they recover. I would rather wait until the recovery is actually there and the stock is $18 a share. Now you might look at it and go, damn it, I knew I should have bought it when it was 10, but you didn't know that it was going to recover. I would rather wait for proof they've recovered. And maybe it takes a couple months, maybe it takes 2 years. At a certain point, I'll look at Rivian, and even if it's a little bit higher, it'll give me confidence and peace of mind knowing that I'm buying something that has now recovered. I don't want to gamble here at $10. Carvana spiked after earnings. Celsius, there's a video comparing Celsius to Monster. Go in my stock fight playlist and you can find it. It should be one of the newer ones. Thoughts on a Tesla price prediction for the rest of the year? I don't really have one. The analysts, let's see what the analysts have to say. They give it a 13% move to the upside, $218. $218 is currently $191. All right, I'm going to jump to the bottom and I'm going to work my way back up to the top. If it lets me. It is not letting me. Somebody asked a really good question about selling off my stocks and I missed it. I'll catch it on the way up. Can you make money on small banks? I want to make $100. Wait, can you make money on small bankroll? I want to make $100 a day. You know, it depends. I mean, there's a lot of variables there. What stock are you buying? How much are you spending? What's a small bankroll to you? Are we talking about $10,000 or $1,000 or $200? Probably not. You would have to buy a stock at $200 invested in even a penny stock. You would have to have a massive move on that stock and get in and out at the right time. Wendy's, I like Wendy's. I just don't know if they'll ever compete with something like McDonald's, but it doesn't mean that they can't do well. Carnival Cruise Lines, the cruise lines, they went up a lot last year. They went up 40%, but this year they're down 20%. It says profits in sight, time for a pause. They're going to have a loss in quarter four. That's one of the rumors from last year. Good prospects, but I stay on the sidelines is another headline from the analysts. DNA. Let's take a look at DNA. That is Ginkgo Bioworks. It's $1.32. No, I don't mess with penny stocks. Give me something that will make me rich in 10 years. No, that's not how this channel works. Fisker, ultra high risk, wouldn't put in more than I was willing to lose. Palantir I like because of government contracts and AI, which are going to be huge. For an UGMA account for a toddler, would you go with ETFs or individual stocks? ETFs. Look, if you have a toddler, you're going to be really busy. You don't want to be sitting and picking 10 or 20 different stocks and then having to monitor those stocks and look at those stocks and pay attention to the earnings. I would go S&P 500, a dividend ETF like SCHD, a growth one like VGT or XLK or something like that, QQQM, one of those, and a real estate investment trust. It's my pinned video on investing for beginners. Go watch it. I would go ETFs. I would keep it as simple as possible, especially because you have a toddler. Is this recorded somewhere? Yes. All my lives record and I repost them on YouTube later that day. It's another reason I try to keep these lives under 1 hour for my sake, because it takes a long time to download and then re-upload onto YouTube. Number two, I guess that's the only reason. Can you day trade TFSA? TFSA. Terra Income Fund. I guess. No, it doesn't look like you can. I mean, this thing doesn't look like it has too much movement. What is your routine after the market closes? When do you study your trades or prep for the next day? Typically, I will look at everything that's on my list. So usually, I'll find stocks by running stock screeners, and I'll monitor them for. I don't just find a stock and then start trading it. Usually, I put it on my Thinkorswim screener. And I have something called a flexible grid because I only have the one screen. I'm not like these stock traders with 15 monitors. I have something called flexible grid that allows me to put up 6 different charts on my screen, and they're very small. And I can look at all of them, and I'll monitor them, and I'll put up alerts. If I get an alert, then I'll maybe make a trade. At the end of the day, I go back, I look at all the stocks, I look at all the charts, and I make a decision for the next morning as to, this one looks like it's gotten sold off, and it's now very oversold, and it might have a little turnaround. Maybe first thing in the morning, I'll throw some money in for a very quick bounce, take a quick profit out if I'm lucky. If I'm wrong, then I cut my losses and I move on. And I just do that over and over and over. I don't really have a lot of prep. Usually it's just a couple minutes at the end of the market close to look at a chart and a couple minutes pre-market to look at pre-market volume. What is your routine? Oh, I read that already. CAVA. Yes, CAVA I love. CAVA's earnings are coming out this week, and I'm going to be laser focused on them. Let me see if I can close this here. Where is CAVA? CAVA's earnings come out on Tuesday after the markets close. And as you can see, it's one of my newest investments. Which stocks or markets correlate with the NASDAQ 100? There are NASDAQ 100 ETFs, and you can go on a website like Seeking Alpha, and you can type in NASDAQ 100 ETFs, and it'll give you a list. It's QQQ and QQQM, by the way. They're the exact same thing, so you only need one. Some people think, QQQ and QQQM are similar, and somehow they're different, and one's going to outperform the other, so I'm going to buy both. No, they are the exact same thing. You will not get a different performance from one, higher growth from another, dividends, whatever. They're exactly the same. What about Fisker? I wouldn't touch it. eBay, I don't know too much about eBay stock, to be honest. Have you heard about Transmedics? No, I haven't. Sam from OpenAI owns 30% of Reddit. I heard about that because the CEO takes home $130 million a year. I don't know what that is in relation to, but I don't know if that was in relation to Reddit or Rivian. Reddit has been pushing their ad platform so they can project higher revenue. Yes, but you know what happens when these companies push more ads is it turns off the loyal customers. And we've seen it with TikTok. TikTok is now all TikTok shop, TikTok ads, sponsored posts, which I'm guilty of doing too. And I open up TikTok and it's just ad. And I can tell it's an ad because it says sponsored down here on the bottom, or because the person making the video goes, hey guys. And as soon as someone says, hey guys, I'm like, oh, I'm about to be advertised to, and I scroll away. DNA stock, we've just looked at. I think it's, what did we say? It's a penny stock. I don't touch penny stocks. Is it over for Rivian? I wouldn't say over, but I would definitely say it's definitely a rocky road for them going forward. What was the stock you mentioned recently that had explosive growth? NVIDIA, SMCI, the super microcomputer, has gone up like crazy. In the last year, it's up 812%, but I don't own it. By Leaps on Reddit, what investment platform do you suggest for buying stocks? Any is fine. It depends on what kind of investor or trader you want to be. So if you really want to be an active full-time stock trader, I would go with an established brokerage like Fidelity or Schwab, because Schwab has Thinkorswim, which is what I use for trading. If you are a casual investor and you just want a couple of index funds, anything is fine. Webull, Robinhood, even though we don't like Robinhood because of the whole GameStop thing and whatever, it doesn't really matter. Index funds are fine. You're just going to add a little every month to them. It doesn't matter where you go. What do you think about Bitcoin? I love it. I own it. I mean, as a trader, I think I missed something here. CDs, Marcus is giving 5.15% interest for 14 months. What is your opinion? I like it. CDs are great. They are not going to stay this way forever. All of a sudden, people are talking about CDs like this great new alternative to investing, and they're always going to be 5%. That's not the case. When the Fed cuts interest rates like they're scheduled to do a couple times this year, the high yield savings accounts that everyone loves will drop. The CDs will drop. So they're great for now. If you want a little bit in them, I don't personally put my money into CDs because I tend to think of CDs and bonds as investments for old people. However, if you're planning on a big purchase, or you're already heavily invested in the stock market and you've got some money sitting there and you're not sure what to do with it, CDs are great. AA, that is Alcoa, right? Alcoa is, I think it's like an aluminum or like some sort of metal, which I thought would do well with Biden being president because of his infrastructure, but this company, I guess, kind of sucks. It's down 44% last year. It's down 22% this year. They have a very small dividend. And even though they have a dividend safety grade of B-, or of B, sorry, it's just a regular B, the stock price losing so much value, almost 60% in the last year and a half, is concerning to me. Since going public in 2016, it's only up 24%. I think there are probably better material stocks out there. Just buy RSP, everyone. No, that is financial advice. You probably shouldn't recommend that. Equal weight ETFs, I'm not a big fan of. It gives everything an equal amount. So everything in the portfolio is the same. I'll give you an example here. Their top 10 holdings are NVIDIA, Catalent, Meta, Align, Tapestry, Ralph Lauren, Advanced Micro, Broadcom, Viatris, and Applied Materials. They all hold around 0.31 to 0.25% of their holdings. It gives equal weight to everything, which means that the big winners in the fund won't carry the index fund. The 10-year performance is 122. SPLG, which is the exact same thing but not equal weight, it's weighted, which means, let me scroll down. Microsoft is 7%, not 0.25. It's not equal across the board. That's not how the markets work. It's not everything is equal and we want everything to have a fair. That's a waste of time. You are going to have, by the nature of the stock market, stocks that do better and stocks that do worse. Going equal weight is fine, but it's not the best. In the last 10 years, the equal weight S&P 500 went up 122%. SPLG, the exact same thing, but not equal weight, went up 169%. I don't like equal weight. Do you trade options? No. Blue chip stocks. You can check my, I got a lot of videos on dividends, which are usually blue chip stocks. You can check that playlist. Melly dropped on their earnings. Where can I have access to earnings transcripts and calls when they are released. Usually your brokerage will post them, or you can go on the company's actual website. Usually company websites, either it'll be at the very top of the screen or way down at the bottom where they have like all the fine print, will have a little tab for investors. You can click that and you can get their earnings report there. What are your thoughts on SPLG as opposed to VOO? I own SPLG. I don't understand why people would buy VOO when SPLG is considerably cheaper. It'll take you, I don't even know the math in my head, 10 times as long to get one share if you're putting in $50 a month. Outside of that, they are identical investments. They have the same growth, the same holdings, the same dividends, roughly even the same fees. VOO is 0.03, SPLG is 0.02. So you're saving a little bit of money, but it's negligible. On $10,000 invested in VOO, you're paying $3. On $10,000 invested in SPLG, you're paying $2. So who cares? Now people will say, well, if you have millions and millions of dollars, it's still negligible. They're both fine. How do you feel about municipal bonds? I have no opinion on them. Do you trade options? No, I don't trade options. What is your thought on iBit? Is that the iBitcoin ETF? I like a Bitcoin ETF. I think it's fine. I'd rather own my own Bitcoin. A lot of these Bitcoin ETFs, they just hold Bitcoin and they charge a fee for it. Why would you pay a fee when you could just buy your own and do the exact same thing they're doing? They're just holding it. But I understand that some people want they want the Bitcoin without having to actually open up an account on like crypto.com and put in the money and own it. And, all that stuff that goes into owning and like creating a new account and buying something. They would rather just get the Bitcoin. I think it's fine if that's the way you want to play it. What do you think about Neo? I think nothing of it. What are your thoughts on Palantir? I like Palantir. Because of the AI and government contracts. Roku, I just posted a video on Roku a few days ago. You can go check it out. Why not put 100% in QQQ? You can, but I don't like all-in-one basket approach just because I want a little bit more diversity, and this doesn't give you a lot of diversity. So you're getting no dividends. You're getting limited real estate probably. I mean, we can look. Real estate is 0.25%. So you're really putting 50% of the fund is in technology. So you're really putting most of your money into tech stocks, which is fine, but I like a diverse portfolio. This guy here, Concha, is asking, do I day trade options? No, I don't day trade options. Berkshire Hathaway, Berk B. By the way, you guys, you don't have to leave the same comment 15 times in a row. I scroll up at the end of, when I reach to the bottom of the new comments, I scroll back, I hit new comments and it drops to the bottom and I work my way back up. So you can ask it once or twice. You don't have to ask 15 times in a row. Roku, I did a video on Roku a few days ago, so you can check it out. ADM, Archer Daniels Midland. Let me do Berkshire Hathaway first. Berkshire Hathaway is up 37% in the last year. It's up 17% this year. It's great. They're like an ETF basically. I mean, they're not an ETF. They're a publicly traded company. They're a stock, but they have so much exposure to a variety of different businesses under the Berkshire Hathaway umbrella that a lot of people do view it like an ETF. They don't offer a dividend. That's the only downside. ADM. Let's do Archer Daniels Midland. That's agriculture, I think, which is great for a little exposure to agricultural products. But let's see here. It's down 34% last year. It's down 26% this year. That's pretty rough. They have a dividend safety grade, however, of B+, and they pay 3.74% dividend. So that's pretty good. The analysts have a general hold rating on the stock, although there are some buys, but their momentum is D-, their revisions is D, their growth is rated also at a D. Their profitability is B. Their valuation is A-. I see here I'm 60% total investment in Tesla. That's a lot. 60% in one individual stock makes me very, very nervous. Digital Gutty says you don't like VTI. No, I don't like VTI. I think any of the total world and total stock market funds are generally kind of a letdown. VTI is the U.S. total stock market, so it holds it basically owns everything that's public, which I think is 3,700 companies, 3,749. The reason I don't like it is because a lot of people think, oh, well, I'll just get everything. I'll just buy everything all in one. Less is more. The fund performance over the last 10 years is 158. And S&P 500, which only owns 506 companies, is up 170%. So it's outperforming it by around 10 to 11%. Why would you pick? Look, I get that you want like, oh, just give me everything, but there's a lot of garbage that's publicly traded, a lot. And an S&P 500 is prioritizing the 500 largest companies. So you're going to have slightly better returns. Let's see, SWKS. That was flagged for some reason. I don't know why. SWKS is, oops, I typed it in wrong. SWKS is Skyworks Solutions. Let's see here. It's $103 a share. Last year it went down 8%. This year it's down 7%. It offers a little bit of a dividend. There's 2 buy ratings from Wall Street. And Seeking Alpha's own research has a hold rating on it. I'm 54 and I only invest. I'm 54, invested in the S&P for only 6 years. Is it worth it to continue until I'm 60? I mean, yes, but if it's your only investment, it would make me a little bit nervous, only because for the last couple of years, we've been teetering on like this will we, won't we with a recession. And the last thing you want is all of your money is an S&P 500 index fund, and you're 54, and let's say this recession doesn't come next year. Let's say it's 2 years, 3 years from now. You're 58 years old or whatever. Maybe you're 57, and you're so close to retirement, and then this massive recession comes, and the markets dump, and it's a slow recovery. It takes 3, 4, 5 years to recover. Maybe it even takes 10 years to recover. This is impacting your ability to retire because your gains got wiped out. Usually, the idea is that you start investing when you're 20, 30, 40, 50. And by the time you're mid-50s, you start saying, all right, I'm up a lot in my gains over the last 30, 40 years of investing. I'm going to start trimming back on the risk and putting it into bonds and CDs, which are safer, but they don't make you a lot of money. For you, I would diversify out into I would consider, I don't give financial advice, but I would consider a dividend ETF, and maybe a growth ETF, even though the growth has already been explosive, and I'm a little bit worried that at this point, we could still see a lot of growth, but we're at all-time highs basically every day, which makes me a little nervous. It makes me feel like we could see a pullback kind of soon. 23andMe, I think their symbol is just me, right? Yeah. I don't know how I feel about this company. It's 57 cents, which is mind-blowing to me that a stock that advertises on television is 23 cents. It is across the board very poorly rated. Growth D+, profitability C-, momentum D-, revisions F. The only thing that they have working for them is an A for valuation because they've gotten killed. The stock is down 78%, so naturally it's going to be very undervalued. As a speculative investment, I would only put in what I was willing to lose because this stock it's the definition of a loser. It is down 94% since going public in 2020. Yes, I day trade. How do you feel about municipal bonds? I don't really know much about them. Do you day trade? Yes. PLTR, we've already talked about Palantir. Hey, do you have a regular time you're on, and if so, what days? Yes, I go live every Tuesday, Thursday, and Sunday at 10 a.m. Eastern time zone. Every Tuesday, every Thursday, every Sunday, 10 a.m. And I download the lives and repost them onto YouTube later that day. So if you miss it, a lot of people are asking about Palantir today, for example. I should probably write that down so I can remember when I download the live that a lot of people were asking about Palantir today. Thoughts on paying extra on a mortgage with 3% rate or investing it? No thoughts on that. I'm not your financial advisor. Can you please explain covered calls? Yes, I have a whole playlist on covered calls. I hope you're still in here. This is for Tamiko Robertson. Go look at my covered call playlist. There are, I would say, 30 videos in there at least. Some of them are explanation videos, like what are covered calls, how do they work, covered calls explained. There are covered call ETFs as well, and they're all in that playlist. So go watch that playlist, and you can pick and choose. Puts on Palantir. Why are you betting against Palantir? That is for apprehensive. Good username. Well, I can see why. It's up 181% in the last 12 months. This year, it's up 33%. It's at all-time highs, I guess. Is it at all-time highs? Let's find out. Palantir's all-time high is 25.53, which was hit on February 12th. So yeah, just recently they hit an all-time high. And it's extremely overvalued. So I could understand why you're betting on it to go down. Check out Flux Power. Man, I have a feeling this is going to be a penny stock. Close. It's $5.31. It's down 22% last year. It's up 29% this year. I would call this highly speculative. My favorite REIT would be Realty Income or Vici. Although I am looking at a new one that just came up on my screen. It's actually not new. I think I did a video on it a few days ago. I think I did a video on it not a few days ago. I did a video on it a while ago. Let me see if I can find it here. What is this? I'm sorry, I don't know who this person is, but I don't go live with people I don't know. Man, did I write it down? Oh, it was ESPR. ESPR. Nope. ESPR. Nope, that's not it. EPSR? Nope, that wasn't it either. Damn it. Man, I didn't write it down. They have like car washes. I don't know if anyone pays attention to ETFs enough to know, but there was... Oh, EPTR. Found it. Haha. Let's see. That was close. EPTR. No? Are you kidding? Did I lose it again? Oh, yeah. Essential properties. Okay, let me just look that up. Essential properties. EPRT. Took me long enough. Okay, here it is. EPRT is another real estate investment trust that I like. I do remember doing a video on this about 4 or 5 months ago. It should be in my REIT playlist. It's down 4% in the last year, which is a lot lower than Realty Income, which is down 22% in the last year. This one pays $1.14 or about 4.64%. It's $24.56. I like this one as well. They do a lot of like single what do they call them? You know, it's like single tenant storefronts, like car washes, fast food restaurants, retail stores and stuff like that, like an AutoZone that would be like a freestanding building. So they're not doing a lot of like real estate. They're not doing a lot of like income properties like rentals or anything like that. So I like this one as well. It is EPRT. Spirit Airlines. I don't know if I would trust the airlines at this point. I bought a little bit of Save just for funsies a couple of weeks ago when they were talking about all that stuff about a merger with who was it? With like I think JetBlue. So I just threw a little in just for fun, but this is what I always talk about when it comes to speculative investments. I only put in what I was willing to lose. Let's see. Why not just invest in the S&P 500? I mean, you could do that. Absolutely. The thing is, an S&P 500 index fund is great for a lot of casual investors who don't care, they don't want to learn. They know that it has a consistent 8 to 12% annual return on average. Some years it'll go down. And they just want one easy investment. I want slow and steady. I'm going to invest for the next 30 years, whatever. There are investments that have higher returns. Not individual stocks even, but in index funds. QQQM, VGT, XLK. There are a variety of different investments that give you more exposure to the overall markets. And if your goal is diversity and a little in this and a little in that, and this will give you passive income. Like real estate will give you passive income. Every month, Realty Income pays a dividend. XLK, VGT, they will give you explosive growth. So you'll have likely higher returns when tech stocks are booming. S&P is just kind of slow and steady in the background. So It all comes down to your individual investing approach. Thoughts on Carnival Cruise Lines? We talked about them a little bit ago. I'm kind of whatever on Carnival Cruise Lines. Let's see here. Their 1 year price target is $21, so it's around 40%. There's 10 analysts are covering it that give it a buy, 2 holds, 1 sell. It's $15 a share right now. As a small part of your portfolio, maybe to give you like travel and leisure in your portfolio, maybe, but as like a surefire bet that it's gonna go up a lot, not really sure. All right, I'm gonna work my way up. I'm going back down to the bottom. Skyworks Solutions, we just talked about. Why is it not showing? SWKS, we've already talked about SWKS. We talked about Skyworks Solutions. It is currently 103 per share. It has a 1 year price target of 111. What do you think CAVA will do this week? You're asking me to make a prediction, and I don't make predictions, but I want to see what their guidance is. I want to see how many new locations they've opened. And I want to see if they're able to keep their costs consistent. They said that they made a pledge last year that they were not going to raise their prices at all for 2023 because there were enough places like Chipotle and McDonald's and other fast casual restaurants that were raising their prices. So CAVA came out and said, not us, which I thought was really cool. But how consistent can they be? Maybe now that some food prices have come down, they'll be able to continue not raising their prices and they'll have maybe higher profit margins. There's a lot that I want to know. Their earnings are Tuesday after the close, so I will be laser focused on that one. I'm struggling with Alibaba up and down. Should I take the loss? Couldn't tell you. I don't give financial advice. I can't tell you what to do with your investments. I will tell you that Alibaba has a lot of buy ratings according to Wall Street. It is $75 right now. Their 1 year price target is $101. That's a 33% move. Now, if you bought Alibaba in the 150s or 160s, it could hit their price target. You'd still be at a loss. I don't know where you purchased it at. Another option for you, if you read the analyst reports and you're a little bit more confident that the stock can recover after you do your own research, would be to consider averaging down and buying a little bit more here so you can lower your cost basis. But I can't tell you what to do. Nick says best dividend stocks. Yes, check my dividend playlist, check my how to make $20,000 playlist, check my how to make $1,000 playlist, check my real estate investment trust playlist, check my covered call playlist. I got playlists for everything. And I don't know how many people don't know that yet. I would imagine it's quite a few because every once in a while I'll get a comment or a DM from someone saying, hey, you should do a video on covered calls. And I'm like, where you been, man? I've got like 30. So go on my homepage, check the playlist. So it'll be like my photo up here, then my little bio. Then you'll see the playlist that you can swipe side by side. Then you'll see my videos. So go on my page and look at my playlist and just keep on swiping. There's playlists for everything. It took me weeks to go back from the very beginning. I've made 5,000 videos on TikTok in the 4 years that I've been on this app. I've made 5,000 videos. And it was a project that took weeks, maybe even a little bit longer, for me to go back all the way and create playlists for everything. So it's really set up in a way that is, if I get hit by a bus tomorrow, everything is still going to be here for you. What is your favorite industrial stocks? I don't think I have any. I don't own any industrial stocks. Let's take a look. Let's go here. I just typed in a Vanguard Industrial Index Fund just to to jog my memory, and we'll look at some holdings. Okay, so Caterpillar, Union Pacific, General Electric, Honeywell, RTX, Boeing, Uber, Deere, United Parcel Service, and Automatic Data Processing, or ADP, are some of their top holdings. And one little hack that we always talk about on this channel is if you want to invest in a certain sector and you don't know which stocks to consider, one option would be to go on and search for an index or a sector that you're really interested in and search for the index funds or ETFs. So this one, you said, what are your favorite industrial stocks? I went on Seeking Alpha and I typed in Industrials ETF. The first one that popped up was a Vanguard Industrials, or VIS, and I just looked at their top 10 holdings. Now this gives me some ideas. Caterpillar is their largest holding, and then Union Pacific. Now, if I wanted to buy some individual stocks in that sector, I didn't want the whole ETF, there you go. I can start looking at their holdings. LZAR. Let's take a look. And we've got 5 minutes left, so I'm going to start wrapping this live up. LZAR, I don't see anything. Best dividend stocks we got. What do you think about Tesla? I like Tesla, but there's a lot of competition right now. Do you like Vanguard? Do you like their funds? I've never used Vanguard, but I like their funds, yes. What is the best dividend stock? I don't think there is a single best dividend stock. Putting all your eggs in one dividend stock is high risk. Look, usually I would say look for stocks that have a long track record. They've raised their dividend over the last 20 or 30 or 50 years. But even still then, Walgreens, which raised their dividend for 48 years in a row, cut their dividend by 48% last year. So single dividend paying stocks are great if you are going to diversify and own a whole bunch. But if you're looking at, I'm going to buy only one, that's very high risk. I would look at a dividend ETF instead, like SCHD. That's most people. S&P, nothing wrong with that. It beats most fund managers. I agree. Even SPGI, I don't know what that's a question in relation to, but SPGI is an S&P Global. I think it's a stock. I don't think it's an index fund, but I'm not sure. It's the financial exchange. Hey, but I'm not too sure about this one. CAVA is CAVA, CAVA. That's for which time? CAVA, it's the fast casual Mediterranean restaurant. Canadian ETFs, don't know any, I'm sorry. Best dividend stocks, I've answered that question. Gambler never talks about their losses. I've taken plenty of losses, and if you follow me, you know that we almost always talk about my losses, and investing is not gambling, by the way. How do you feel about AbbVie? ABBV is, let's take a look. It's currently $179 a share. It's got strong buy ratings across the board. Their profitability is rated at an A+. They also have a very high dividend. Well, high for a biotech stock. It is 3.48%. They have a dividend safety grade of A-. And I also believe that AbbVie is one of the largest holdings in SCHD. And I'm going to write it down on my little list here. For a dividend video. Soundhound Sprinkler, I don't know what that means, but Soundhound was just, NVIDIA acquired like 1.7 million shares of them. Is it still good to put in on CAVA? And thoughts on Lucid? Hello, Coco, another regular. I can't tell you what to do, but CAVA is still in their infancy. They've been around for a very long time, I think since 2012. But they have not been publicly traded for a long time. They went public last year. So, I mean, they're in their infancy in terms of being a stock and with a large plan to grow and expand. So I continue to own it, and I continue to buy it as well. I bought it on IPO day. I bought it all the way down. I don't go live with people I don't know, so whoever is sending me a request, get out of here. It's currently $51 a share. Since going public, it is up 33%, and they only went public last year in June 2023. I like it. I own it. I will continue buying it. And Lucid is a lottery ticket. I would only put in what I was willing to lose. Would you consider index annuities for retirement right now that interest rates are high? I couldn't tell you. I don't know anything about that. Do you like Vanguard? Do you like their... Oh, we already answered that one. Let's see here. Okay, I'm going to go down to the bottom. I see Dennis says I have EPRT and I like it. SoFi long-term. I'm holding it long-term. EPTR, NNN, and Cube equal the best REITs. Let's take a look at NNN. I've never heard of that. NNN REIT. Okay, I'm going to write this down. Maybe I shouldn't put my paper all the way over there. I'm going to look into these. NNN. I already know EPTR, and you say Cube. Oh, the storage facility one? Cube, I know. Buy realty income now, thank me later. I don't think you can give financial advice, but okay. Where did you buy your REITs from? Vanguard or Moneybox? I've never even heard of Moneybox. I buy my investments through my brokerage, which is Schwab now, but it used to be TD Ameritrade. I've never heard of Moneybox. TQQQ. It's triple leveraged. I don't like it. Triple leverage is great for day trading. If you think there's going to be some big news coming out on the stock market, you can triple your gains because they're using options and other derivatives to triple the gain. So if it goes up 3%, it'll go up 9%. If it goes up 20%, it'll go up. You know what I mean? Like it'll triple, but it can also triple your losses. It's very high risk, and triple leveraged or double leveraged funds usually are meant for day trading, not long-term investing, because you can just compound your losses dramatically, and they have much higher fees. Nick keeps saying best dividend stocks. We've talked about it. I've answered your question. Vici, I like. Please talk about SMCI. I did. It is a video posted a few days ago. When you see a stock that goes up 900% or 1,000% or whatever it did in a year, that's usually your sign to not make an investment. I know a lot of new investors look and they go, damn it, it went up 900% and I missed it. So I'm going to buy it now for the next 900%. That's not usually how it works. The video I made a couple weeks ago in a live right here on TikTok, somebody was asking about it, and I said, it's 900 and something, it's almost 1,000. Anything that goes up this much, this fast is bound to pull back. And the very next day, it dumped. Good timing on my behalf, but I said it's almost $1,000. This stock could hit $1,000 and then dump. And sure enough, it hit 1,004, and then it dropped all the way down to 730 something. I don't chase stocks that have had runs like this. It's just something you're going to have to live with. Oh, well, you can't get every single winner. Yes, I do like Vici. I see a lot of people asking about Vici and real estate investment trusts. Broadcom I like. SMCI is basically gambling. I agree. Anytime you see something that's up 900%, it's very high risk. It's very high risk. Rivian, also very high risk. Princess Betty, if you're still in here, you're saying, what is D-King and CAVA? D-King is DraftKings, like the sports betting, and CAVA is a fast casual Mediterranean restaurant that has like incredible locally sourced, very fresh ingredients. They sell their hummus and their stuff in grocery stores as well. It is excellent. If there's a CAVA near you, go. Study their menu before you go. Their lamb meatballs are excellent. Their honey harissa chicken is excellent. I wish there was a CAVA where we are. We're house sitting and dog sitting right now. I wish there was a CAVA here because I would go right now, but there isn't. You should buy Palantir on the pullback. I own Palantir. How about Amazon and ARM? I like them both, but I don't own ARM. I do own Amazon. Palantir to the moon, I agree. How do you decide your entry point? If it's a stock trade, I look at the relative strength index. I look at volume and Bollinger Bands. If you're not sure what those are, I have a playlist on those here and on my YouTube channel. If you're talking about how do I decide an entry point for an investment, it also depends. If I'm looking at something that's gotten beaten up, I will still look at the charts and see if it's oversold. But generally, I don't really care about an entry point for investments because I'm buying it for the next 30 years. So you can sit here now in the moment and go, oh, it's $30. What if it drops to 27? What if it go, we're talking about a couple bucks here. 40, 20, 30 years from now, you're not going to be sitting there going, oh man, it was 30 and I could have bought it at 27. Hopefully it's going to be $500, maybe $1,000. You don't know. Just like these right here, Apple, Meta, WWE. What did I buy them for? Couldn't tell you. I don't remember my initial purchase price. Same with Nvidia. I don't remember what I first paid for it. 130, 125. I don't know. But in the moment when I was buying it, was I sitting there going, what? Oh, it's 120. What if it goes to 110? No, because I was thinking, I love this company long term. I'm going to buy it here at 125. If it drops to 110, I'll buy more. And that's exactly what happened. What is your YouTube channel? If you go on my homepage right here on TikTok, you'll see Instagram. Click on Instagram, a little pull down tab will open. It'll have Instagram and YouTube with links to both of them. Or you can just go on YouTube and type in Kenneth Suna. That's my first and last name. It'll pop right up. By the way, you can also go on my website, which is also kennethsuna.com, and there are 3 totally free guides. There's actually 4. One is a dividend guide that just kind of explains what dividends are for people who don't know and want to learn a little bit more. 2 is a ETF template where you can compare 2 similar ETFs. The third is a stock fight template, which is a blank template that's clickable. You can download it and you can compare and do your own research. You want you want to invest Coca-Cola or Pepsi? Which one? Now you can use your own stock template to do that. The last thing that's on the website is my free resource guide, which has every website that I use to do my own research. Red Blood, do you recommend QYLD? No, I don't recommend anything. I don't give financial advice. Should I put my money in Berkshire Hathaway? No, I don't recommend anything. I don't give financial advice. That is a decision that you have to make. What about Alibaba? They have a lot the stock is down a lot, but the analysts really do love it. They have a very high price target on it. Portfolio mix for a 55-year-old. Carlos, go check on my playlist here on TikTok that says investing by age. There are videos for people who are 55. Also check on the investing for beginners playlist. Not the playlist. Check on the pinned video on my homepage that says new to investing, do this. It breaks down a variety of ETFs and investments suitable for all beginner investors. Why did you PM me? I didn't. That would be a fake account. I have over 1,000 scam accounts on social media, TikTok, Instagram, and YouTube. They take my account, they take my videos, they DM you, they say, hey, how are your investments going? And you go, oh my God, Kenneth is writing me. Hi, how are my investments? And they say, well, I'm doing a thing right now where I'll guarantee you $5,000 in profits. And you go, what? Hell yeah. And you wire them $5,000 and you never see it again. And then I get a DM going, hey, I think I want my money back. And I go, what are you talking about? They got scammed. So please be careful. Please be careful. Yes, people are making a lot of money on SMCI, but you know who's also not making a lot of money is people who bought in at $1,004 and now it's $860, or people who bought in at $1,004 and it dropped to $730. You have to be careful with stocks that are ripping like this. Sorry for looking at your eyes without permission. I don't get it. Let's see here. SoFi long term, I think I already answered that one. What platform do you use to see the grading? It is Seeking Alpha. And if you want their dividend safety ratings, their dividend safety scores, it comes with their premium account, which you have to pay for. I use Seeking Alpha every day and I love it. If it's not for you, if you don't want to pay for it, don't do it. If you're interested and you want to try it, there's a link in my bio. We did a partnership about 2 years ago, and they gave me like a perpetual $50 off coupon for people who are looking to try it. But it is in the link in my bio. You have to click on my link tree. It'll take you to the Linktree website where you can scroll around and find the Seeking Alpha discount. Bonds are garbage, won't keep up with inflation. I've never been a bond guy, and I don't really see the appeal of bonds, especially for 20 and 30-year-olds. I don't understand why I'm getting DMs from people who are like, I'm 20, should I buy bonds? They think it's safer somehow. It is safer, but they think it's like a good investment. And it's like, dude, you're like, my mom has bonds. The bonds are great for people who have made their money. You're 20, you should be putting it into tech stocks and growth stocks and dividend stocks so you can compound over the next 30 years. Chill with this bond stuff, man. I don't get it. Same with CDs. I don't get it. Alibaba, we've talked about. Any military stocks you recommend? No. I don't really invest in military. I trust you. Would you be willing to look at my portfolio, make a comment, and get compensated? No, I don't want to take anyone's money. You can send me your portfolio if you want, but I can't really give you advice. I can't give financial advice. Do you think NVIDIA will split? I have a feeling that NVIDIA might. There's a video that I posted a few weeks ago now. You might have to scroll back a little to find it, on stocks that I think could split in 2024 or 2025, and NVIDIA is one of them. Why do you like DraftKings? I bought DraftKings. I first bought DraftKings at the very beginning of COVID when sports and all that stuff got shut down, and I said, oh, this is just obvious. They're going to shut down sports. Everything sports adjacent will tank. And then when they say, hey, COVID is over and sports are back, those stocks will rocket again. I did it with AMC too, and I made a fortune. I did it with DraftKings, and I made a little bit of money. I still have DraftKings, actually. Now I said I was just going to hold it until they said sports are back and the stock would pop. But it actually has been, I'm up 172% on DraftKings. So I ended up deciding, hey, I'm going to hold the stock. Running Discipline says, sorry for looking directly into your eyes without permission over and over. I don't understand that. I'm going to jump down to the bottom. Sports betting is crazy in America. Thoughts on SoundHound? I think it's interesting that NVIDIA made a purchase in it. The symbol is SOUN. It's still a penny stock. It's $3.92. It's up 84% this year. NVIDIA bought 1.7 million shares, so they bought a very small amount. But I don't. There must have been some reason that they really liked it, but they took a small kind of speculative investment in their own right. Steve says no split for NVIDIA until it hits 1,000. I wouldn't be surprised if you turn out to be correct on that. Lunar. Everyone is asking me about Lunar because of the moon landing. I don't know anything about it, so I think what I'll do is make a video on Lunar later this week. So I can do some research on this stock because I really don't know anything about it other than it's up 275% year to date. Wild. Do you think PayPal will see a rise in their near future? Probably. I mean, they have a lot of competition right now. There's PayPal, there's Square, Apple has it. All the companies are now coming out with these, whatever it's called, transactions and payment processing. So it could eat into their market share, just like Tesla, who has a lot of competition. What do you think of QLTY? I don't know what this one is. It is quality GMO US quality ETF. Okay. Their expense ratio is 0.50%, which is relatively. I mean, it's still low. Anything under 1% is low. But this is. Some people might say it's high. Year to date, it's up 9%. Since going public, it is up 13%. It went public in November of last year. It's $29. It pays a 0.14% dividend. That's nothing. They invest in 36 companies, and I guess their gimmick is that they're investing in quality stocks. Let's see here. Okay, here's what they say. The investment is managed. It is actively managed. That's why their fees are a little bit higher. And their objective is investing primarily in U.S. equities in companies that the fund's advisors believe to be of high quality. So essentially, this guy, whoever is running this fund, says, I'm going to buy 36 companies that I think are very high quality. And instead of you buying 36 individual stocks, you can just buy my fund and you're going to get everything that I believe is high quality. It's an interesting take. Their top 10 holdings are Microsoft, United, Alphabet, which is Google, Johnson & Johnson, Oracle, Accenture, Meta, which is Facebook, Amazon, Apple, and Abbott Labs. They hold 36 companies in total, so it's very small. It's a very small fund. 33% is in technology, 26% healthcare. This is interesting. I kind of like this fund. I don't know if I would buy it because there's no real dividend and it's relatively new, so I might wait and see how the fund performs. But it's an interesting take on an index fund. I wish there were more dividends, though. It's mostly skewed towards tech, 33% tech. But I like it. Cole says, tell me about the guide you mentioned on your screen. It is on my website. My website is kennethsuna.com. It's my first name, my last name. Click on it on the menu on the website, which if you are on your phone, the menu will be down here. If you're on your computer, the menu will be up here. I can't believe I have to say this, but I tell people every day, go on my website and they go, you're a liar. I went on your website and it wasn't there. And I go, well, you click on the menu and they go, oh, I found it. I don't know why they assume I'm lying, just because they couldn't find it. Anyway, click on the menu. It'll pop open and you can then click on the guide. It's a free resource guide. It has every website I use that I do my own research. How much do you make from TikTok? It depends. Right now, it's my full-time job. So I used to be a stock trader. I stopped about a year ago to focus on TikTok full-time. I said, I'm going to give it a year. I make most of my money through brand deals. I don't sell a course. I don't sell one-on-ones. I don't have a Patreon. I don't have anything paid where I'm asking you for money. We set up a subscriber-only live for a little bit. I've tried to turn it off. TikTok won't let me turn it off. I've emailed them literally 30 times to say, hey, could you please disable this? They never respond. So if you are a subscriber, don't resubscribe unless you really, really want to, but you really don't have to. Most of the money goes to them anyway. And then, so I make my money through brand deals and through their TikTok creator fund, which pays you about $1 for every, I think it's 10,000 views. So if I get a video with 40,000 views, I'm getting like $4 or something like that. Is that how it works? Or is it $1? I think it's $1 for every 1,000 views. I don't really know. It's not very much. Usually I make around $12 to $15 a day just from the views here on TikTok, and then from brand deals, it depends. I turn down probably 3,000 to 8,000 a month from brand deals from companies that I don't feel okay promoting. All right, everybody, I'm gonna wrap this live up. Do you trade options? No. 4 cents of you? Well, that's why it's a little. AMC earnings I wouldn't touch. Favorite AI ETF? I think I would go with bots if I had to pick one, but I don't really have one. Aldrin just says, please, in caps. I don't know what that means. Please. Please what? I'm here. Cole, I'm here. I'm not ignoring anything. I say, if you ask a question, wait, I will respond. There's over 400 people in here, 90 questions every couple of minutes. So you got to give me a minute. I try to give everyone their fair time to have an answer. I'm not ignoring anything. I'm wrapping the live up now and I don't have much time to answer 90 more questions. Can you make the weekly What's Moving the Stock Markets Again videos again? Yes, Rick Gilbert, I will make those again. AMC thoughts, I wouldn't touch it. It's too high risk right now. What do you know on TKO's future? I don't know anything about their future. Beyond earnings, the stock has been going down steadily. I don't know if I would touch it. Thoughts on GameStop, wouldn't touch it. When are you back? I go live every Tuesday, Thursday, and Sunday at 10 a.m. What is your website again? It's just my first name and my last name, kennethsuna.com. Beyond, you're asking, we'll do Beyond one last time. The stock is down 54% last year. It's down 12% this year. It's got sell orders across the board. Every analyst has a sell rating on it. Their grades are terrible. Valuation C-, growth D-, profitability D-, momentum D+, revisions C. Wouldn't touch it personally, but at $7, the question you have to ask yourself is, what are you willing to lose? Best dividend paying ETF, check my ETF playlist and my dividend playlist, but it would probably be SCHD in my opinion. Thoughts on 4060 XLK and SCHD? I like it. I can't give financial advice though, so I can't tell you whether you should do it or not. I would also consider an S&P 500 index fund and maybe some real estate or something like that. 61 years old, SCHD, probably you want income. A lot of people are saying please, but I don't know what you're asking. Boy says, how would you invest 100,000? Go look at the playlist that says how investing by amount. All right, everybody, I'm going to wrap this live up. I will be back next Thursday. I don't know anything about Fastly, but you can come back on Thursday or Tuesday at 10 a.m. and I will answer it then. Casey, you're asking what website I use. It's Seeking Alpha right now. Seeking Alpha, TipRanks, and MarketWatch. All right, everybody. I'm gonna pass on this live. We're gonna end it all here. I'll be back on Tuesday. We went over by 18 minutes, so I'm sorry for everyone whose question I didn't answer, but it's impossible at this point to answer everyone's question. I'll talk to you all later. I'll be back on Tuesday at 10 a.m. What was the question about NVIDIA? We've talked about NVIDIA. I will be downloading this live and reposting it. I can't answer every question. I'm sorry. I'm running out of time. All right, everyone. I'll see you later. Bye.